Hey guys, how's it going? I'm back with another weekend video to talk about some of my potential plays for this upcoming trading week. Of course, nothing in this video is trading advice or financial advice. You have to do your own due diligence to make your own trades and decide what's best for you. It is currently Sunday afternoon, so the heat map here is just showing how we ended Friday, just as a quick refresher. So big tech was pretty much sideways. I mean, Amazon was kind of the biggest loser, and big tech down about 1.3%. But overall green board for the market, unless you're looking at the bank stocks and the financial stocks, which was expected given that they had earnings, and earnings were not that great this past week. Although I did expect the bank stocks to be hurt even more than they were. But that's what just the market is doing right now. It's kind of disconnected from reality in my opinion. So we'll have to see what this trading week brings. There are a few people that have been calling for a big dip. Actually, they were calling for it last week, myself included. So who knows if it'll come this week. We'll have to see what Monday brings. There's also now talk that AstraZeneca has positive results on their vaccine trials. So there might be a big vaccine pump after hours tonight and maybe pre-market tomorrow morning. But again, we might pump and dump where after hours and pre-market, the market goes really green, and then we sell off early Monday morning just from profit taking. So I don't know. I wouldn't put too much weight on that. Personally, I am all cash going into next weekend. Personally, I am all cash going into next week, so I would be looking into opening up some new positions, some new cash secured puts. So for me, the best scenario would be if we could open up red and stay red Monday, so that way again I can lock in some good premiums and get in at some good strike prices. And then if we want to rally for the rest of the week, that's fine by me. But some of the tickers I'm looking at, or again AMD, if you missed my previous videos from this past week, I did end up opening up some puts that were very short term. I mean, they were 2 days to expiration. They expired last Friday. Collected about $40 in premium for those puts on AMD. And AMD did rally a little bit on Friday, so AMD is trading at a little over $55 right now. I really would love AMD to open up in the red, being like the $52, $53 stock price, because that way I can lock in some cash secured puts at the high 40s. I really want to get in some shares on AMD in the high 40s. I think that's kind of a nice spot right now because I think AMD is trading between low to mid 50s. So if I can lock in some shares of stock and then sell covered calls in it while it rallies back up to, let's say, mid 50s again, I can lock in some good gains. So right now at a share price of 55, I would probably end up getting in at the $51 strike again, just to get like a 0.4% return on my risk. So let's just see, that'll be $20 as of Friday afternoon. Obviously these numbers are going to change when we open the market, but $20 divided by 5,100 in collateral that would require for a $51 strike price, that's just about a 0.4% return on my risk. So we'll have to see. I really don't want to get in at 51 strike because again, AMD has earnings coming up in a little over a week, and typically AMD stock drops after earnings. So I don't, if there's a sell-off up to earnings, I don't want to get assigned at 51. It's not the end of the world. I've been actually assigned AMD shares at 51.75, I believe, in the past. So this would actually be the lowest share price that I've been assigned at. But again, I would love to get assigned in the 40s because I think AMD is a $50 to $55 stock right now. So if I can get assigned in the low 40s, then my cost basis is low. I can sell covered calls, and if my shares get called away, well, then I've collected stock appreciation as well. So hopefully AMD will open in the red. I mean, if AMD can open in the 52, 53 range, I could probably get in at the 48, 49 for at least a 0.4% return on my risk. So that's what I'm looking to do. And maybe if it looks like we're going to bleed off slowly Monday, maybe I'll wait until Monday afternoon or Monday during power hour to open up a position to see how the market's going to react on Monday. But that's AMD. I might get into some Micron shares as well. Micron is traded, in the red actually as of Friday. So if we open up at 49 again where we close, or even lower on Micron, I think that would also be a good play personally. Again, not financial advice, but if I can get into Micron in the mid 40s for a 0.4% return on my risk, again, I think that's a good share price for Micron to have a low cost basis and to be able to sell covered calls on. And then again, if my shares get called away, collect not only the premium but a decent amount of stock appreciation. So let's just take a quick look at the overall graph. So, you know, AMD, again, it's kind of in the higher limit of where it likes to trade. So you've seen some of my other videos, you see there's this kind of channel here where AMD just loves to trade between roughly $49, $50 and like a high 58, so $57, $58. So it's been bouncing between this channel up and down for weeks now. So that's why I said I would love to be assigned shares of AMD in the high 40s, because if I can get assigned below this level or right at the level, then I know it has a lot of room to run. So if I could get assigned 49, sell in the 50s, again, get assigned at 49, sell in the 50s, I would have made hundreds of dollars by now. So right now it's kind of in the middle of that zone. So again, I'm hoping for some sell-off in AMD. And again, earnings is on July 28th for AMD. So if we do dip to low 40s, I might just end up buying some shares on AMD, because again, I want to get in at a high 40s stock price or lower and then start selling covered calls. So same thing with Micron. Let's take a look at the graph for Micron. So again, Micron's also kind of been trading in this channel of, you know, a recent low of about $48 and kind of a high. I mean, this is really extreme here, but this is around $52. But really, I would say around 50, 51 is kind of this channel. So again, same thing with Micron here. If I can get assigned at 47, 48, 49, then to me, Micron has room to run to get into the low 50s. And again, same scenario where I can collect stock appreciation and then sell covered calls if my shares get called away. But so Micron has been towards the lower end of the RSI, so it is nearing the oversold category. So again, if Micron does sell off again Monday, I'll probably favor getting to Micron over AMD at this point, because again, AMD, in terms of the RSI, it's pretty much near the midline or the midpoint. So not really overbought, not really oversold. So to me right now, between the two stocks, Micron has a better setup. But again, we'll have to see what it does Monday morning when we open. But I'll keep an eye on it after hours tonight and then pre-market tomorrow morning to see if I need to adjust my potential plays. I mean, here's IWM here. IWM, I just don't, I think it's overpriced right now. I don't like it in the high 140s. I would love to get assigned IWM in the 130s, but it hasn't been there for quite some time now. Actually, it's been 134 on June 12th, 136 on June 26th, 137 on July 9th. So I think we're a little overvalued on IWM, but that's just my personal opinion. And IWM is one of those stocks that has a lot of volatility. So the premiums are always good on IWM, but it moves a lot. So usually if any kind of overall bad market news comes out, IWM will also drop significantly, or vice versa. If we get, like I said, an AstraZeneca vaccine pump on Monday, then I can almost guarantee that IWM will rise with the rest of the market. IWM, from what I've noticed, tends to fluctuate a lot just on generic or general market news. So if there's good news that comes out for the market as a whole, IWM will rally. If there's bad news that comes out for the market as a whole, then IWM will drop. So, I mean, if you can follow the news and buy shares of stock or open up cash secret puts on IWM when it's near oversold territory, I think you'll make money. Again, not financial advice, but here's SMH. I've been looking at the SMH, but gosh, this thing's been actually hitting all-time highs. This is the Van Eck Semiconductor Etf. So this tracks multiple semiconductor stocks like TSM. I believe it has NVIDIA, AMD, Intel, and such. I have to double check on that, but I know it tracks multiple semiconductor stocks in terms of various percentages. But it's actually hit all-time highs. You can see pre-illness we were at 152, 153-ish, and currently we're trading at 160. So this is one of those stocks I've mentioned in my previous videos where if we ever have another big dip like we did back in March, that I want to get into for more of a long-term play, because I think semiconductors are a good plan or a good bet for the future, just because a lot of technology and a lot of innovation is going to happen in the future. So all of that needs semiconductor chips and things. So that's why I think this is a good long-term play. But what I would do is if I can get in at shares on SMH at a very low price, then also not only ride it long-term, but also sell covered calls on the way to collect a little bit of extra premium and try not to get those shares called away. But those are the kind of the three main stocks I've been playing right now is AMD, Micron, and IWM, and they've treated me fairly well so far. And take a look at Disney. You know, I played Disney a while back. I just really wasn't a fan. There's a lot of, I don't want to say confusing news about Disney right now, because not about the company itself, but it's just very odd because the Disney theme parks are open, which if you don't know, one of them is in Florida. And it seems like every day Florida is hitting all-time highs of the illness. So I think if Disney ends up closing down the theme parks again, the share price is going to drop again. So we'll have to wait and see. I mean, if the share price does drop, if bad news comes out on Disney and that they are going to close down their parks, that might be a good time then to open up some cash secured puts. Because again, Disney, I believe, is a good company long term. So if you do get assigned shares of Disney, I'm not too worried about it because I think given enough time, it will come back up. But it just all depends on how long you'd be willing to type that cash in shares if you needed to. But I like Disney as a company. They also have the theme parks. They have Disney Plus. They have ESPN. They have DraftKings. They have a lot of entertainment diversification. So I like it as a long-term company. But again, I just don't like where the price is right now. I would love to get Disney in the like 100, 110 range if it does drop. But at the very least, the 110, maybe 100 to 110 range. I don't like it at the 110 to 120 price point right now because, I think one bad news of Disney closing its theme parks could send the stock dipping down. So I just don't want to take that risk right now. And like I said, it seems logical that Disney may at some point close down their parks again if cases in Florida keep rising. So I keep it on my watch list, but we'll have to wait and see. I mean, if you're looking at other stocks that I keep on my watch list, because that's the question I get asked relatively frequently is what other stocks do I look at? I have other stocks on there, such as Intel, IBM. I had Walmart in there, but premiums weren't that great. Coca-Cola was on there, also premiums weren't that great. But mostly tech sector stocks. I mean, I keep big companies in there, not because I have the capital to trade them, but just to keep an eye on them, like Facebook, Amazon, Google, Microsoft. I also recently added Starbucks on there, which is SBUX as a ticker. I haven't really played them ever yet, but I keep an eye on them. They have decent premiums, and also the price point on Starbucks is kind of at a price level where I don't have a lot of stocks on my watch list because it's trading right now at $75. Most of my stocks on my watch list are in the like $30, $40, $50 range or the 100 plus range. So I don't have any stocks that are kind of in that middle ground of like the 50 to 100. And Starbucks kind of fit that bill where it seems like it's a decent long-term play. It's a stable company. A lot of people drink coffee. A lot of people are still drinking coffee in the midst of maybe a financial recession. And it has decent premiums and decent volume in terms of its options. So it kind of fit the bill as kind of a gap stock between the $50 stocks and the $100 plus stocks I have on my watch list. But again, I haven't really played them. I just keep them just to keep an eye on them and see what happens. But as you can see, pre-illness, it was about $94 and it's still only trading at $75. So it hasn't had that V-shaped recovery like some of the other stocks have. And also, if you do end up playing Starbucks, just keep in mind that it does have earnings coming up on July 28th as well, just like AMD. But yeah, just another stock to keep on watch list just to see what's going on with it. Let's just take a look at, I talked about AMD, so let's just take a look at this cheat sheet on bar chart to see where my $48, $49, $50 strikes would potentially land. So 48, 42 has been the 1 month low for AMD. So again, if I can get cash secured puts at 48, I would be pretty comfortable with that because that would mean that AMD would have to hit new monthly lows. The 13-week low is also $48. The 14-day RSI at the 30% level is $44. And also 47 is the 38.2% Fibonacci retracement from its 52-week high. So again, I'm feeling really comfortable at the $47, $40 strike if I can get it on AMD in terms of cash secured puts, because I think it would take a lot for AMD to get down that low, even post earnings. And like I said, if it does get down that low and I'm assigned shares, I'm pretty confident, barring any sort of global market downturn, that AMD will rise back up and I can sell covered calls on it for premium. And also, if my shares do get called away, I can collect hopefully $100 or more in profit, depending on the number of contracts I have or number of shares I end up owning. So that's kind of my thought process for this coming trading week. Let me know in the comments below which stocks you're looking at. Let me know if you have any questions or comments as always, and happy trading.